kind of revisit what does this outbreak period mean. And so really there's a couple joint notices that have come out, and they're basically saying is that they're extending the certain times that, we as employers, employees have in responding to different things. So, and I think last time I equated it to Groundhog Day, and so I think I'll continue doing that just for lack of any other creativity. But effectively what has happened is that they're disregarding any time, or the time period from March 1st of 2020 until 60 days after the national emergency ends. And so clearly that means that we don't have an end. So we're kind of in this pause of either distributing information or receiving information. And I totally understand why, because we're working remotely. It's going to be more difficult to communicate with employees. It's more difficult for employees to communicate with us. There's uncertainty on changes that might be happening at my spouse's plan versus changes that might be happening at our plan. And so I completely understand why they created this kind of this gap or this outbreak period. But some of the things that we kind of think about is that if you look at 4, 5, and 6, this is really where I want to spend the time, is that we all know that if somebody has a qualifying event and they have 30 days to notify us of the qualifying event change, and if they notify us after that 30-day time frame, then they're not allowed to make that qualifying change, and this is just under Code Section 125. But this now falls into this outbreak period, which means that if somebody started the 30-day period and starting on March 2nd, that maybe was the 10th day of the QE period, well, then their notification period of 30 days stopped on March 1st. And they're not going to continue counting those remaining 20 days until the 60th day passes after the end of the national emergency. So we kind of have this void in time where people now are able to make some changes based upon kind of where they are within having a qualifying event happen. Some of the things that we think about too is that if we're looking at the 60-day election period, or number 6, the date for making COBRA premium payments pursuant to ERISA, that could potentially cause a problem. And what we're learning is that it is causing a problem. Because if you kind of look at the time frame, I'm going to skip through this just because I'm going to be covering it in the next slide. I'm a visual, so I kind of have to map things out. So if this thing started, say, on the 1st, well, not say, but it did start on the 1st of March, so now we're kind of in this no man's land of time. Well, if somebody goes into a COBRA election status, whether it's because there was a layoff or because the company there was reduction in staff or whatever the case may be, if somebody goes into a COBRA situation or a COBRA enrollment, the time frame of when they're going to be having to pay their premium payments is now kind of vanished until after the 60th days. And so what we're left here is a situation where we can have somebody that is maintaining on our insurance plans. COBRA is clearly for the medical, dental, and the vision on the federal side. They're generally most likely going to be generating claims because that's typically why people are taking the COBRA. However, if there's not a payment, there's not a penalty. So normally under regular circumstances, if they're not paying their COBRA premiums, then there's a consequences, and then they lose the COBRA insurance, or not the COBRA insurance, but the COBRA coverage for the insurance plan. Specifically now, in this lag of time, insurance carriers only have a 60-day retroactive enrollment process, and a lot of that has to do with just how their contracts are being set up, as I understand it, with providers, because once a provider's been paid, that dollars have been transferred to those providers, so those insurance companies can't recoup the claims, and so they've got restrictions. And so what we've seen happen now is a lot of carriers I shouldn't say a lot, but the ones that we've been working with are instituting employer guarantees of payment, which means that if we have somebody that is qualifying for COBRA or they're on COBRA, the insurance companies are submitting a letter saying, okay, we will honor this COBRA enrollment. However, the employer is going to back us in the event that the employee is not paying the COBRA premiums. And so I think this is just something that we just need to be aware of because it needs to be kind of added into the conversations of if we go into another shutdown, are we furloughing, are we laying off, are we terminating? Because we're always thinking, okay, well, they can pick up COBRA. Some employers are saying, well, we'll pay the COBRA for the first 30 days, and then maybe we'll do it for the next 60 days. But I think this changes that conversation because if there's an opportunity where someone's not going to be paying it, they're generating claims, we as employers just kind of have to think about it as far as how is this going to impacting our budget, as well as how it's going to be impacting our benefit plans. And I'm not sure I have all the answers for it today. However, I just, someone going on COBRA, we just kind of need to think through it and understand that the insurance company may be submitting a guarantee of payment so that if the employees don't pay, then the employer is going to be, the plan sponsor is going to be on the hook for paying those premiums to keep the coverage going. Something else I skimmed over a couple times ago was talking about the mid-year enrollment. And this is not something that's mandatory. This is something that you actually have the option of adopting. But what it allows you to do under the section or the notice 2020-29 that came out, and it does actually have a sample notice, and we certainly have that notice as well. But it allows employees to make mid-year changes to without an actual qualifying event. So if I declined to make elections in the past, if I want to enroll into an alternate plan that you happen to be sponsoring me, or if I find out that there's a plan that I'd rather be enrolled in at my spouse's plan or some other health insurance, then with a written attestation, then I have the opportunity of changing coverage. And the theme you'll notice from these three different instances is that it's all in a purpose or principle to gain coverage. It's not a change, a mid-year election change, so let's say I want to waive coverage. It is saying, no, that I did waive coverage in the past. However, now I'm having second thoughts. I don't have a qualifying event, but I want to actually now join the insurance plan. Or I'm on a high deductible health plan right now, and I would like to move over to a lower deductible health plan. And so employees have the opportunity to make this. Again, this is an optional, it's not mandatory, but you do have this option under this notice if you want to do mid-year enrollments. And then from this, and this kind of where this part of the presentation came up, is because we started getting some questions about, well, is it really the wild, wild west? Can we kind of do anything? And the answer is, well, not really. We have to still fit into some guidelines. And so I was using this question, I think it was kind of a good example, as it came across as, can an employee with a newborn elect to make changes to the dental and vision coverage, specifically drop coverage? Because as you guys know, dental and vision is defined under healthcare. So when they're talking about how you can gain healthcare coverage, change healthcare coverage, is this available under the 2020-29? But you got to step back and say, well, generally no, because under a newborn clause, you only have the opportunity to add that newborn, or under the tag-along rule, you can add the dependents as a newborn. You don't have options to make alternate changes, drop coverages and stuff like that under the newborn. So you kind of have to step back a second and say, well, no, that's not part of the regulation. It's kind of a little bit outside. So, the answer is going to be no, you can't just drop coverage. We're not really in that much of a wild, wild west right now. However, then, there's always a however. Let's say that there is coverage that's going to be becoming available under the spouse's plan. Well, then the option is, then the answer is then yes. Then actually you would probably have the opportunity to do that even under the newborn clause, because you're adding coverage through possibly a spouse's open enrollment. So there's always a little bit of a what if. And then another however for this answer is that it's possible that they can drop their dental and vision coverage because, again, under the spouse's plan, but under the outbreak period, if there was a qualifying event, which they could already be in, so I covered that in the first part a couple slides ago. If they forgot to tell you about the qualifying event that they were already in and they thought that the 30 days have already expired, well, remember that clock stopped ticking on the 1st of March, which means that they're still technically in the qualifying event in the outbreak periods. Now they have the opportunity of making changes. And then also, if they attest that they're going to be enrolling in other coverage, then through the attestation from 2029, then yes, they probably can be waiving your coverage as long as they promise to enroll through the attestation in another plan. So it's a little muddy, but just kind of knowing is that we're in this pause of time where the clock stopped ticking for elections, for premium payments, for qualifying events. And so that if somebody is asking a question, or for a participant is coming to you asking a question about their coverage, or if you want to do a full-blown mid-year enrollment, you kind of have those opportunities now, again, assuming that you'd like to have individuals gain coverage. It's not really being used as a process to reduce coverage. It's always going to be in the essence of having additional medical coverage. So I just wanted to spend a few minutes just kind of clarifying that, because I did breeze through it a number of town halls ago. Certainly the FSA dependent cares, you can make changes to those as well. They have also extended a grace period and a carryover period for unused funds. So it's also extending out to the FSA dependent care benefits as well. But again, we still have the outbreak period. If you are adopting this, then you will have communications, and then there's certainly some plan amendments. And I did get some other questions on this one, so I want to clarify it as well, because the health savings accounts are also going to be impacted by how somebody is going to be enrolling in a plan. So if you are allowing for an extension of the FSA to have your incurred expenses, and you're kind of thinking about this, so if I had electric surgery and I was planning on using my FSA dollars, but I wasn't able to because the elective surgeries were postponed or this got canceled because of capacity issues, I can't get it rescheduled. So you can say, okay, we'll extend this time. However, if somebody then decides to, under the outbreak period or the Section 2029, to get a change enrollment plans, they want to go now into an HSA qualifying plan from a traditional PPO plan, they can certainly do that. But because you have the extension from the FSA, that's going to impact that they cannot contribute into the health savings account. So there's a lot of little intertwining rules that we just kind of have to make sure that we're thinking through, depending upon how you might want to have some of the these changes through the benefit plans.